Hello and welcome to today's Minds at Money 5 at 5 show, sponsored by Dundee Goodman. For those of you attending 5 at 5 for the first time, the aim is to maintain engagement between investors and miners through a lively interactive format. A few admin announcements before we start. To make it as interactive as possible, please have your video switched on. To ask a question, you have two options. You can ask a question in the chat function at the bottom there, or you can go and wave your hands virtually through the participants function and go and we can unmute you and you can ask your questions live. And today's show is hosted by Jonathan Goodman, Executive Chairman of Dundee Corporation. So without further ado, I'd like to hand you over to Jonathan Goodman.
Thank you, Andrew. As Andrew said, my name is Jonathan Goodman. In addition to being the Chairman of Dundee Corporation and CEO of Dundee Corporation, I'm also the President and CEO of Dundee Goodman Merchant Partners, which is the merchant banking arm of Dundee Corporation. I'm very excited to be hosting this panel today. One, we have three great investors. Warren Irwin, the CEO of Rosseau Asset Management, Warren Gilman, the CEO and Chairman of Queen's Road Capital, and Joe Mazumdar, the editor of Exploration Insights. In addition, we also have three of my favorite companies. Dundee has a significant position in all three of these companies, and you couldn't ask for three more capable CEOs. Garett, Macdonald, the CEO of Maritime Resources, Michael Hudson, the CEO of Mawson Resources, and Ian Bamborough, the CEO of Saturn Metals. But before I pass it on, I just want to explain to people why we're so excited about the junior mining sector at Dundee. And we think that now is the best time in at least a generation to invest in this sector. And there's a bunch of things going on that we think help. And the first one is interest rates are at or close to zero. The second one is that with the COVID virus, we've now had every government has shown their hand. They're going to spend as much as they can, and probably even a little more so. So you're going to have an era of unprecedented government spending with close to zero interest rates. That couldn't be a better environment for gold and silver. And then when you add on top of that, that when this all settles out, just about every solution that the world has to the problems of global climate change involve mining. I think we can safely say we're heading to an era where it's not only going to be good for the gold, but it's going to be good for the base metals and the battery metals, and many base metals are also battery metals. We're heading into a good time. On top of all that, and this is the real reason, is there's still a lot of fallout from the last cycle. And when you look at something like the GDXJ, the G Gold ETF, it's still down around 65% from the peak of the last cycle. And so we haven't yet seen the junior stocks merge. We believe that a well-managed portfolio of carefully selected junior mining stocks will dramatically outperform over the next 5 to 10 years. The catch is that the mining industry needs to pick up its game from an ESG and community relations point of view. So on that note, I'm going to say let's get started. So we're going to start with a basic presentation from each of the investors to give the elevator pitch in one of their favorite stocks. And we'll start with Warren Irwin. He's muted.
There we go. Can you hear me now?
Yes, we can.
All right, great. So, Jonathan, thank you very much. My name is Warren Irwin. I'm President and Chief Investment Officer of Rosseau Asset Management. We've been running a resource-focused hedge fund for about 23 years based in Toronto. And we've had a really good track record. Probably the best thing about it is we're still in business after 23 years, which is a tough thing to do in the resource space. But we've made a lot of money for investors over the years, and myself, like Jonathan, I'm very excited about what the future holds for resource investing. Some of the valuations I'm seeing out there, especially some of the base metals, super cheap. And when we see all the capital projects going forward, they're going to need a lot of metal. They're going to need a lot of copper, nickel, met coal, iron ore, you name it. They're going to need it to fund these capital projects to get the world going again. And of course, to fight, air pollution in our cities, we'll need electric cars. And requires a ton of metal. So I share your view on that, Jonathan. I know you'd asked me for my number one pick, or a pick that I really like within my portfolio. I have a number of interesting stocks in our portfolio. The resource sector is quite risky, so it definitely makes a ton of sense to have a portfolio of resource stocks. But I've got different ones with different types of risk, whether it be political risk, management risk, other types of risk. So if I was to pick one name, I would probably pick Colonial Coal right now. Close second is NextGen, because I like the uranium cycle here, and NextGen's a great company. But Colonial Coal, they have a property with 700 million tons of metallurgical coal in northern British Columbia. Access to the ports up in northern British Columbia, which aren't as congested as Vancouver. The quality of the coal is well known to the buyers in Asia. So and the valuation is trading at a fraction of where precedent transactions have taken place. Stocks are around 70 cents. I believe if we even get the low end of where the valuations are happening, we could get a many multiple fold increase in this stock. The company is talking to a number of suitors, so I've got my fingers crossed. It's just a matter of time before we get a bid that we think is pretty successful. So it's a Canadian company. I like the jurisdiction, Canada, northern BC, in a recognized coal area, and good access to ports, good management team that have done this before. So that's probably one of my top picks, and I like the company very much. I think any investor should probably take a peek at it, see if it meets their needs as far as risk reward.
Thank you, Warren. And Warren Gilman.
Thanks, Jonathan, and thank you, Warren, for that initial kickoff. If everyone doesn't know me, Warren Gilman, I'm Warren Irwin's younger brother, and our mom liked the name Warren, so she just named everyone in the family Warren. My older brother started Rosseau, and I recently followed in his footpaths because he's a very good older brother. And I started up a thing called Queens Road Capital, and it's a new company. It's TSX listed. People may know that I used to run a company called CEF Holdings, which was 50% owned by Li Ka-shing, one of Asia's richest men in Hong Kong. We were a global resource investor for about 11 years. We did very well, had some tremendous returns, and the purpose of Queens Road effectively is to take that investment philosophy and continue it, but allow other investors to share in the wealth, and that's Queens Road. One of the biggest investments that we made at CEF was a company which Warren introduced called NextGen Energy. And it is a phenomenal asset in a very safe jurisdiction. And of course, when I started up my own company, Queens Road, the first thing I wanted to do was to gain as much exposure to that company as I could. And lo and behold, a few weeks back, we closed our first investment for Queens Road, which happened to be NextGen Energy, $30 million US investment, 15 million of convertible debentures, which are carbon copies of the ones that we did with Mr. Lee. And indeed, Mr. Lee had to personally approve our participation in the convertible debenture issue, which we're very pleased that he allowed us to effectively co-invest with him. Plus 15 million of common shares. For those of you who don't know, NextGen is a truly industry disrupting deposit. I've been in this business going on 40 years. I'm a mining engineer, and frankly, I've just never seen anything like it. This is effectively one of God's gifts to the Earth's bounty in terms of mineral deposits. If you look at the PFS, which was released last year, we're going to release the bankable feasibility study near the end of this year. And I don't expect that the data will be too much different from the pre-fees. But the pre-fees outlines a deposit that at current production rates is going to produce about 20% of the world's uranium from a tiny little 1,200, 1,300 ton a day underground operation. There is not going to be any surface tailings. All the tailings are going to be put in an underground tailings management facility. Low capex, an IRR of 50 to 60%, production costs that are going to be about 10% of the selling price of uranium, which is going to be sold under long-term contracts. Where do you hear numbers like this? It's just extraordinary. So if I was to pick my favorite stock, which the organizers have asked me to do, obviously I'll put my mouth where my money has recently gone, and that is NextGen. Thanks, Jonathan. Thanks, Andrew.
Wonderful. Thank you, Warren. And Joe. Unmuted.
Oh, yeah. Got you now. Okay. I think a lot of people know Exploration Insights. It's been around for over 20 years, I think, from Paul Van Eden to Brent Cook to me over the last 5 years. It's basically an investment newsletter. We just talk about what I'm buying and selling. Pretty simple. And jurisdictionally, in terms of, it's basically subscriber based. I make my money off the subscribers and the portfolio, and there's really nothing else to say about that. So we got asked to make one pick. I'm going to do three because there's so many people online. So two of them have the same thesis. So what I'm looking for in the current market, as we've gone from the leveraged stocks of producers down to advanced exploration and development, I'm looking for upside on the drill bit and people that are funded to deliver catalysts. I'm looking for great metallurgy because I want it taken out. I want infrastructure, jurisdiction, great management team, share structure, liquidity. And that's hard to find, all that. But I think I found two. One is in Western Australia, Bellevue Gold, BGL on the ASX. And the other one is Liberty Gold, who are looking at an open pit oxide heap leach project in southwest Idaho. So that would be, what I would say are for me two potential takeout targets. But more so for Liberty, what I see potentially for Bellevue is something like Gold Road, where they actually go into production because of the Australians, more so the Canadians, actually like going into production. And Gold Road did a fabulous job of that, and I can see Bellevue following that same sort of route, but this time an underground high-grade deposit. Liberty just discovered a new stratigraphic unit that's actually delivering oxide grade as well, which was just recently done last week, hence the exploration upside. So those two, and then just to take a contrarian view and knowing that base metals have been hit pretty hard, my favorite pick on that line would be Trilogy Metals. Well funded with South 32 putting all the money in. The next catalyst is basically the road permit that I think should be happening in the next few weeks, and then the feasibility study. And I still think there's a gap in production in the next 3 to 5 years, and there's just not projects that are coming out to fill that gap. And the lower copper prices have actually stopped a lot of people from developing new projects right now. But even uncommitted, you need uncommitted projects actually to fill this potential gap 5 years plus. And so that's it for me. Thanks.
Wonderful. Thank you. So we got 5 new stocks to invest in, and now we're going to introduce you to 3 more. And hopefully everyone's taking lots of notes because I own all 3 of these next companies. The first one is Garett Macdonald, the CEO of Maritime Resources. Garett? He's muted.
Oh, there we go. Can everybody hear me?
Yeah.
Yeah. Okay. All right, good. Well, thank you. I'll tell you a little bit about Maritime Resources. We have a couple of slides that might be brought up. If that helps, I can walk you through them. But basically, we have a very exciting gold project in Canada on the East Coast, on the island of Newfoundland. What we're really dealing with here, we have roughly about 1 million ounce global resource of high-grade gold with measured and indicated resource in our Hammer Down deposit, which is our main project that we're grading over 9 grams. And what you're seeing on the screen here tells a lot. So this was a former high-grade mine. I think it was the highest grade gold mine that ever operated in the province at 15 grams. It operated with an 8-gram cutoff grade between the years 2000 and 2005 when it was closed. And, operated during a time of quite low gold prices, $300 to $400 per ounce. So what they were doing here is they would mine these veins and ship them north to a process plant that they had called Nugget Pond, which is still there. So the gold circuit is still sitting there idle with the permitted tailings pond in the area. So we have the benefit of having local processing infrastructure, highways, available workforce, skilled labor in a province that wants mining. So we've been very successful over the last few years getting this going. We just came up with a new PEA study announced at the end of February. It looks very good. We came up with a project roughly around 500,000 ounce to total production. We averaged 70,000 ounces a year for the first 5 years, processing over 9 grams through the mill. And the economics are fantastic. We look at $1,500 an ounce. We're seeing after-tax economics of 185 million NPV, 75% IRR, and at spot prices, of course, it's even better. And since we're in Canada, we get the benefit of the exchange rate, looking today at over $2,400 an ounce Canadian. On top of all of this, we have some very, very exciting exploration upside. Maybe we'll look at the next slide there too, please. So there's a good view of one of the veins right at surface. So we are dealing with something here that looks a lot like what I saw when I worked at Dalridian. I was a consultant there, led the feasibility study a couple years ago. We have a series or dozens of these high-grade narrow veins, vertical. They go down to about 250 meters, and they're cut off by a fault around that depth, and we don't know where they went. It's a late-stage fault, cut off the mineralization, and the big upside on the exploration front for us would be to find the other side of this deposit. That's a game changer, and we have 2 drills right now that are drilling at the site as part of our 10,000 meter exploration program, trying to find the rest of this deposit. So although we have enough to move ahead with the project, we have very, very good exploration potential with this idea here of locating these the other side of the deposit. We think it's perhaps shifted a little bit deeper or just laterally nearby. So we have some targets that we're drilling right now in areas that have never been drilled before. I don't know what else to say. It's a great project and a great jurisdiction to work in. So we have kind of 3 goals that we set ourselves for the next 12 months. We're going to drill about 20,000 meters of diamond drilling. Part of that is infill and grade control work at the mine for the feasibility study. And some of that is brand new exploration to try and grow the resource. So 20,000 meters. The second thing we want to have done in 12 months is our feasibility study to be ready and be in a position to raise the project financing, which is, the capital we looked at for the PEA wasn't too bad, around 57 million. And we would then also like to have this project permitted in the next 12 months. So our permit application will be going in very shortly. Support for the project is excellent. We're in a province that actually wants mining and values it. And we're backed by some very good institutions, Dundee Goodman, Merchant Partners, Sprott, and 1832 Asset Management, collectively own around 45% of the company. So that's about it. That's the pitch. So you get all of this for a $25 million market cap company. So we're certainly well valued, on the low side compared to some of our peers, trading right now at just under $20 US per ounce, enterprise value per ounce. Or if you look at it in terms of market cap per MPV, which is a neat metric, we're way on the low side at around 0.15 compared to, say, a company like Pure Gold up around 0.75. So that's about it. We're there's the last slide where we're located here in Newfoundland. We're north of Marathon Gold. We're south of 2 operating mines, Anaconda and Rambler, and very easy to get to. From Toronto, it's a 2-hour flight to Deer Lake, and within an hour drive, we're standing on top of the ore body. So yeah, it's been great. And the next 12 months are going to be very exciting, I think.
Wonderful. Thank you, Garett. And now from a slightly bigger island than Newfoundland, Michael Hudson from Australia. He's muted.
Okay. Good morning from the Big Island at 2 a.m. So I'm sharp and ready to go. So thank you, Jonathan, and the organisers for having me here. Mawson Resources is a Toronto-listed company. Despite this accent, I've been in the Canadian markets for the last 20 years. We have a flagship project up in Finland. I've had also a couple of decades up in the Nordic countries, and also we're now exploring in Australia down in the Victorian goldfields, which is on my back doorstep here. So 2 tier 1 jurisdictions. The flagship in Finland has grown dramatically. It's pivoted from an exploration play. We made the discovery from first principles from the Handlands out. We put 60 kilometres of drilling into that project. When it only had 15 kilometres, we put out an initial resource 18 months ago of just over 400,000 ounces of gold equivalent. We've tripled the metres into that project over the last 2 years, and we're just about to come out with a resource upgrade over the coming month or 2. We just finished 14 kilometres of drilling. That literally just rounded out over the last few weeks with all the data in hand, and had some very good results. We've got 3 individual bodies over a 4x3 kilometre area that extend down now to about 500 metres from surface and extending down. We've tested about 5% geologically of the area that we're exploring in terms of the host horizon. So there's no limit of geological upside, but the focus has been over the last year or so in drilling out this resource space. In Australia, we closed on a transaction of 3 projects, basically in the shadow of the head frame of Fosterville, which has taken all the attention of many, more so in the Canadian market than ironically in the Australian market. And I'll go just briefly into that in just a moment. So yeah, the thrill of new projects in Australia and the foundation of a growing resource that we hope will get around the 1 million ounces this resource upgrade, but it's going to get a lot bigger as we continue to drill this out. We've just closed on an $18 million financing over the last month or so. So we're well cashed up to execute on these programs. And I suppose just reflecting on what we're trying to do, I mean, the timing is everything in this business, as everybody knows. And unfortunately, those of us suckers who are caught in the business right through all the cycles can't have to live through the poorer timing. But that's when you get everything in place. In the last 3 or 4 years, we've done the hard yards, we've got the team in place, we've done that drilling, and I think you do well in this business when you've got one of the top quartile deposits in your space, and you're advancing that towards your end goal. And our end goal here is to create a multi-million ounce discovery with permits, and then we'll see where that takes us. The team, we've got, I'm a geologist. Discovery is my main aim in life, but I've realized that the rocks are probably one of the least important things after you've got the rocks, and we've got a good environmental team and a corporate and project governance team, really important as a project pivots, and capital market partners and directors, and to help us navigate how to finance this appropriately. We've got about 60% of the company is institutionally held, including some great shareholders, including Jonathan and his team, and then about another 10% is held by corporates as well. So that shareholder base has changed dramatically over the last year or so as the project's pivoted. Just briefly, Finland has seen 400 or 500 years of exploration, but gold was only discovered in the 80s. It's all the right rocks, the same rocks as the Tanami here in Australia or West Africa, but never explored for since literally the 80s, and that was government exploration. So it's only seen literally the last decade, and lots of good discoveries are being made even up until the last few weeks in Finland, and there'll be a hell of a lot more. Lots of glacial, 99% glacial till covers the project. So that's what we're working with, and we'll make that a lot bigger. The Australian side of things is equally, we're opening up a new search space there that is just amazing in many respects, and it surprises me how we can continue to make discoveries in this business. Finland was sticking out of the ground with gold over 6 kilometres, and that was only found over the last few years. In Australia, in the Victorian field, 80 million ounces has been taken out, but what's changed the whole scenario in Victoria is that Fosterville has proven to be such a wonderful deposit that has been found only the last few years. Only 4 or 5 million ounces of that 80 is in the style that Fosterville is. So two very different styles of mineralisation in Victoria, and nobody cared about Victoria since World War I, basically. It was a super part of the world, but everyone went west to Western Australia, and that's the opportunity we've got. We're literally drilling underneath super high-grade deposits that were mined in the 1800s that extend over kilometres that haven't been tested, literally not one drill hole below 50 metres. So very much like Garett's deposit there, thin, uber high-grade veins over kilometres that we can test there. So really, that's the thesis. Value by discovery. We've done it before. I love doing it. We've got the team in place, and two projects at slightly different levels that we can advance in this good gold market. So we've lots of drilling coming up over the next year. The budget to execute on that, and hopefully we find a lot more gold and advance our two projects. Thanks, John.
Thank you, Michael. And the last company to present today, but certainly not the least, is Saturn Metals, and their managing director, Ian Bamborough, is on the line. Ian?
Yeah, hi everyone from Perth, Western Australia. Thanks for the kind introduction, Jonathan. And I'll give you a bit of a brief introduction on Saturn Metals with the help of a few slides from Elaine. The company is relatively new, having listed in Australia in March 2018. And the main project is located in the heart of Western Australia. You can see the little map down there. Probably about 2 hours drive north of Kalgoorlie, the big mining centre in the heart of the goldfields. Apollo Hill, and there's 1,000 square kilometres of ground there, and the main asset is Apollo Hill itself, which is a very simple, large, what I think will ultimately be very open pittable gold deposit. Just to give you some ideas in terms of the cross-section there's a very understated Apollo Hill main, 781,000 ounces resource, which is quoted down to only 180 metres below surface. The deposit itself is really very thick. The mineralised corridor you're looking at there is about 600 metres wide. And on the left-hand side, where it says Apollo Hill mineralisation envelope, you'll see the majority of the drilling and the majority of the ounces up until really about 12 months ago was located on that footwall side of that asset. And the drilling that you see over that big sort of pink alteration envelope mineralized corridor is what we've really been working on in the last 12 months. So a couple of step changes in terms of shallow, higher grade mineralization as we've moved east. You'll see some of the intersections there. The Apollo Hill main asset itself was 24.5 million tons at just a gram. But because of its geometry, its thickness, potential for a very low stripping ratio, and a couple of huge step changes now in terms of the discovery to the east. And the other thing I always like to point out on that diagram is the mineralization on the sort of eastern side of that diagram is very under-drilled compared to the drill density on the left. Fresh deposit. No historic mining other than one tiny little shaft from the old timers who went down there and I think probably stopped about 4 meters depth and followed one little quartz vein out, and just a nice discovery. If we move on to the next slide, the other thing that makes this deposit in my view, excellent, is a very simple metallurgy. This data was collected from 2 big 100-meter composites in the heart of the ore body at 0.8 grams a ton, so we're not gilding the lily in terms of the recoveries. 60% gravity gold, and you can see the little grey specks in there in the white quartz veins. It's coarse, free milling, low cyanidation, no preg-robbing materials, no copper, and even at the coarsest commercial grind size of 300 micron, we're seeing 92% recovery. And I suppose that simple physical cheap processing, along with a very simple, ultimately what I think will be open pittable ore body and low stripping ratios, I think is really going to make this thing sing. And of course, at that coarse grind size, you know, the third lever you can pull on a big low grade pit like this is your energy use. We're about 36 kilometres from the gas pipeline. There's the potential to truck gas, at least in startup, out of Kalgoorlie, and defer a bit of capital cost. And I guess that's the sort of second point. And if we could move on to the next slide, Elaine, that would be appreciated. I always like to finish with this one, and if you can imagine yourself on one of those drill pads down there, I think that shows our sort of energy and activity in the last 12 months particularly, and shows the geometry of the ore body, the width of the corridor that we're looking at. And I always like to make the comparison compared to some of my other ASX listed peers. You know, the potential here is for the ounces to exist in one single, simple, big selective mining unit operation with perhaps a big mill chumping away through it. You can see the arrows there to the south, where we've been sort of drilling south and east. We have 20,000 metres underway in the next quarter, and a plan to do about 50,000 metres to really bring this thing up. I think, you know, with a 781,000 ounce deposit, I think once upon a time when we listed a couple of years ago, my sort of my initial goal for this thing was, you know, to try and get this to that million ounce mark. I'll be careful what I say here, not resource, but in terms of the inventory that I can see and the potential. I think in this one single spot, there's the opportunity for about 2 million ounces within the top 250 meters. We do own 1,000 square kilometers of ground around this deposit, and to put it, you know, the youth of that ground in context, when we listed a couple of years ago, one of the first things I had to do was fly 75% of it, or 750k, with first pass high resolution magnetics. And that's something that people were doing in the goldfields 25 years ago when I first turned up as a young lad from England. We recently made some new discoveries about 3.5 kilometres east at the Calypso prospect. And I think that's it in a nutshell. We do have one other joint venture in New South Wales and a place called West Wyalong, where we've a couple of very learned gentlemen that we know have found a great opportunity with a similar story to Michael there, and with a very high grade historic gold mine, which wasn't mined since, I think, sort of finished at the end of the First World War in 1916, and a very similar story in that, you know, exploration stopped, activity stopped, and that's a little bit of a sleeper agent for us. And simple capital structure, you know, recently supported by Dundee, Goodman and others, and we're off for a very exciting year, and a lot of drilling and a lot of results, and thank you for the opportunity to talk.
Thank you. And I can see the chat line is lighting up. The next part of this segment, and I can say we're just about almost completely on time, which is very out of character for me, is we're going to get each investor to ask a question of each company. But before we do that, we had a question came in, and before we started, and the question, I don't know who it was from, but it was, with the copper crunch coming, what is the view on Ecuador as a new mining jurisdiction, and specifically the Tier 1 copper gold project operated by SolGold? Is this company currently investable? And I'm going to go over to Mr. Warren Irwin for that one.
Yeah, I have an indirect interest in the Cascabel discovery through Cornerstone. I think the deposit is quite good. The challenges right now that are facing SolGold is, what should we say? I have a problem with SolGold management, frankly. But I think that probably gets solved up here in October. In October, BHP, which is one of SolGold's largest shareholders, along with Newcrest, but BHP basically has the handcuffs off in October. So we'll see what happens, whether or not they move to replace management or whether they move to take over the company. But it's not in a steady state situation, in my opinion, right now. Something has to happen. It either needs to be taken over, which gets rid of the senior management, which I think is important to do, or the shareholders will just vote out senior management and put a team in there that's more conducive to being cooperative in the industry. So is it investable? It's a great project, but the risk, of course, there's two big risks to it. One is management, in my opinion. The second one is, Ecuador, there is some risk in that jurisdiction. It's not the worst jurisdiction in the world, but there is obviously some jurisdiction. It's not Ontario and it's not Quebec. Is it investable? I think, yes, it is, but I think you want to put it in your higher risk category of your investments. The upside I do see to it is that you could see a takeover bid come late October, early November from BHP and possibly suitors out of China or elsewhere who want copper assets, because this is clearly a top 5 asset, as said by the CEO of BHP. So we'll see who has an interest in it this fall.
Warren or Joe, do you guys want to add anything?
No, I'm good. I'm good.
Okay. All right. So why don't we turn to Warren Gilman? Do you have any questions for the companies?
Yeah, thanks, Jonathan. A quick question for each one. First of all, Garett and Newfoundland, and let me list the 3 questions, and then I'll let you all come in. Garett and Newfoundland, in a previous life, a few decades ago, I acted for BP on the sale of Hope Brook Gold to Peggy Whitty, if you remember any of those names. And one of the challenges that Hope Brook had, amongst many others, was copper in the ore body, which was interfering with their recoveries. So ever since then, I've had a sensitivity towards copper in the ore body in Newfoundland. Now, your deposit is significantly distant from the old Hope Brook deposit, but maybe you can just put my mind at ease regarding copper in the ore body. So that's for Garett. For Mike, with respect to Finland, I know Finland is a great mining country and lots of good mines operating there currently. The one thing I'm not familiar with Finland is there's no doubt about getting your permit, most likely. It's just I don't know the timing. What is the process in terms of time? What's the time frame to get a new mine in Finland permitted? And finally, for Ian out in WA, forgive me if you mentioned this point, but obviously a couple of hours outside of Kalgoorlie, lots of old mills in the area, lots of new mills, lots of activity. Do you need to build your own mill on that site, or do you have access potentially to nearby mills that you can do a joint venture deal with or strike a tolling arrangement with? So those are my three. Maybe back to Garett to answer the question about Newfoundland.
Yep, thanks, Warren. The answer is no. We don't have copper. And it's a clean ore. It's pyrite. It floats easily. It leaches quickly. There's no arsenic or any other side effects. It's a nice clean ore.
Excellent.
And my question was how long in Finland? And we're just going through that right now, Warren, in terms of some internal studies, especially with this impending resource upgrade, and just how to piggyback resource expansion, which is still driving the value of Mawson, and getting those permits, which will also create the value. So it's probably 3 years, all things being equal, if things are going well, but it could go out to 5 years. So starting early is important in the permitting side of things. We do have already the land use plan ratified for mining over the area, which is basically showing the huge support we get from the local municipality and the regional authorities up there in Lapland. But one of the things that makes Finland the country it is, it's a social democratic country, and they've had a system that exists for any government decision that anybody can appeal any government decision, whether you're building a condo, looking for an exploration license, or permits for mines. So that is actually the main timing there. That can delay things by a year to 18 months at those key points. So piggybacking and putting the permitting in place early, I think, is important. And that's one of the challenges that we've got in terms of just making sure we're still expanding, but not taking decisions in a binary way.
Yeah, and I'll move on to my question just in terms of the mill, if that works. I suppose the big thing is we're about 53 kilometres from St Barbara's Walia Mill, 73 kilometres from Anglo's Sunrise Dam. Dacian's probably about, Mount Morgan's is about 90k. The thing with Apollo Hill is it does have the potential to be big enough to support its own operation. And when we've looked at toll treatment options in the past, just from a pure run the ruler over the idea perspective, it becomes really obvious that we'd be robbing from Peter to pay Paul kind of thing. And even with the higher grades, the leverage that the higher grades and the hanging wall are producing on the big overall asset, it really makes sense to just keep growing the asset as quickly as possible and work towards, in in what's foreseeable, we have a base load which could provide a milling centre for other deposits in the region. So I prefer to sort of see ourselves as a, you know, we've got a central belt location with everything far enough away, and probably the only big deposit for a large distance. So options do exist, but ambition is going the other way, if that helps, Warren.
Okay, understood, Ian. Thanks.
Thank you.
Joe?
Okay. Yeah, sorry. So yeah, I guess if we're going to do 3 questions in that, I guess first for Mike at Mawson, like I've been up to Finland and that a couple of times. You know, they've had work done by their own geological survey. My question would be, you know, the application of modern techniques. Is there a big gap there that could be, you know, with the new companies coming in, a lot of, you know, Canadian companies and also Australian companies coming up there? Is there a big opportunity there? That's for Mike. And for Ian on Saturn, I guess what it's like on the ASX companies and the management teams, I find that they're more willing to take a project into production. I was just like, philosophically, where does that come from compared to TSX companies that just sort of just want to put a scoping study together and see what happens and hopefully get an M&A bid? And then I guess lastly for Maritime, you actually want to build this project. I just want to understand the capital upfront that you're proposing. What does that actually get you in terms of gap of what is already there and what you're actually putting in? That's it for me.
Okay, Joe. Yeah, I mean, I drink the Kool-Aid. I've been up in the Nordics for many years, and absolutely the opportunity is huge. But I think it's being borne out very well now, right? We've got Orion, who set the world on fire a year or two ago with some of their discoveries. Rupert, just over the last few weeks around an old mine site, have made a wonderful discovery up there, and we've been at it a little bit longer and got the resource base that's expanding there. So absolutely, there's a huge amount of opportunity. Just like Bellevue that you mentioned, I suppose from a technological point of view, I mean, 101 in exploration, but we found the association with gold and conductive pyrrhotite. So we've been able to apply geophysics and you know, in exploration, you collect the data and systematically collect it and then drill. And there's a paucity of drilling. That 99% of cover up there in Finland has hidden everything essentially. And you know, it is a mining country, as Warren mentioned before, but pretty much every mine has been made in outcrop. So made in that 1%, where there's 99% left that is under that thin. And I'm only talking 3 to 5 meters of till. So Outokumpu actually means broken hill. It was a big craggy gossan sticking out of the ground, which was one of the super deposits in Finland that held them at the turn of last century. So yeah, absolutely. If you've got the wherewithal, and I think, you know, we were very lucky from having very good shareholders that took us through some slow permitting back 5 or 6 years ago, and then had the ability to wait out sort of exploration success. And you can see that with Rupert now. Back your technical people and make sure they're not trying not to prove it's there, as in as long as the money's not being spent to try and prove that something's not there, but if the program's continuing. And that's what we're seeing the result of, some good money going into the ground and good teams and discoveries. So yes.
All right, Joe. Yeah, and I'll have a go at that question myself, I suppose. And I don't say this lightly because I'm an Englishman originally, but I think in terms of going through to production, you could argue Aussie spirit is something you can't take away from. I think you know, particularly in Western Australia, there's a sort of vibrant market that I think rewards that longer term push for that bigger value creation and actually pushing things into production. I think there's a longer strategic opportunity around in terms of particularly in gold and the commodity cycles and the way companies grow and build. And certainly getting a producing asset up and running gives you the opportunity to leverage into others. And if you look at certainly I look back over the last 20 years and see some of my predecessors and the way they've built companies, I can see that opportunity again. I think personally, I've always, I think sort of having a mining geology background, had the ambition to find, develop, build and ultimately operate a mine. And I know one of our founding shareholders has done that a couple of times personally himself. And I think possibly the jurisdiction in Western Australia, and I may speak with ignorance on how things are in North America or Canada, but I certainly think the West Australian government and arguably, in other parts of Australia like New South Wales, there's a great track record of deposits being found and being brought into production, and a good system to help do that. So perhaps it's that jurisdiction that makes it more possible, if that helps. Thank you.
All right, I'll go next. So Joe, you're asking about capital costs for the project. When the PEA study, we looked at a capital of around 57 million total Canadian. And this would really be broken down into three main areas. Since we are starting with an open pit at Hammerdown, we'd have some pre-stripping costs. We'd then have a sorting plan to be on site. XRF and optical sorting seems to work very well. We've tested it extensively in Germany and the States as well, 2 different vendors. There's more work to do for sure to test this, but it looks very good. So we'd have a sorting plant there, which is especially important if we're hauling, about an hour and a half away to a mill. So we want to avoid hauling material that doesn't pay us anything, and it's just cost. So then we get to the mill. This is a gold plant that's been sitting there for a while, so there's some refurbishment that would have to be done. And because it's a unique situation, it's actually an operating plant, but it's a copper concentrator operated by Rambler. And so for us to use the gold plant, we'd have to put in a small ball mill that would basically decouple the gold plant away from the copper concentrator. So therefore creating our own independent mill that we could use. And so we've been talking with Rambler about that and get along quite well with them. So at the end of it, we'd have a 700 ton a day operating gold plant with a tailings pond right next door to us. And this is part of the overall objective of the company, is to get into cash flow during these high prices and grow from there. So trying to use what we have available, and this is a low capital option for us.
Okay,
what do you think?
Thanks a lot.
Thank you, Garett. Warren Irwin.
Okay, I've got some, so first off, questions for Maritime. Garett, I noticed in your slide you talked about a 75% after-tax IRR, which is pretty compelling based on $1,500 gold. I'm going to ask you, I imagine you've probably done a back of the envelope at what it would look like at $1,800 gold. Can you comment on any First Nations issues? And I don't think you mentioned in your presentation whether you're looking at, in your mine development plan, whether it's going to be underground or open pit. If you could answer that question, that'd be great. For Michael Hudson, if you could comment a little bit on your market cap and your cash position. And also, I was in Finland a few years ago. And can you just refresh my memory about issues with the reindeer there and reindeer/caribou habitat and issues surrounding that, and if it could impact your operation? And for Saturn, I took a look at your cross section, and it definitely, if you do have the grade, looks like you could have quite a compelling open pit without a huge strip ratio, especially the way in which your ore body seems to be there on the footwall side. Can you explain sort of what sort of grade do you think is you'd be looking for in an open pit to make it economic? Because it looks like your grades when you're step out drilling don't seem to be super compelling. But I'm looking at just your goal with respect to the grade. And those are my questions, Jonathan.
Okay. Garett, why don't you go first?
Yeah, sure. So I knew you were going to ask that question. And at 1,800, basically the spot price, our after-tax NPV is around 265 million with a 100% after-tax IRR, everything else being equal. Obviously, we benefit from the exchange rate as well. So that would be a spot exchange rate with those numbers. Yeah, the idea is to start with the open pit before we go underground. We have the benefit of having quite a bit of underground workings already there. So this was a small cut and fill mine. Ramp development is still in place. It's flooded at the moment, so we could dewater that. We'd run for about 3 years, Warren, before we go underground. So we'd be in the pit for about 3 years. We'd stop, access some of these underground workings, go down below the pit for about 2 years, and at the very end, we'd come back up and take out the crown pillar. There's another deposit about 2 kilometers away. It's called Orion. Never been mined before. A little bit lower grade, 3 to 4 or 5 grams, but it's fairly vertical. Small pit to start, underground afterwards. This deposit's open at depth and along strike, so we have some more work to do there. You asked about First Nations. No, we have no issues. We'll be looking at that closer during our permitting process, of course, which is kicking off here shortly.
Thank you.
Mike?
Thanks, Warren, for the question. 95 million Canadian market cap today, more or less 18 million cash in the bank. We plan to spend around $7 million in Finland and 2 to 2.5 in Australia this year. Big 20-kilometre program starting in December and smaller programs in both countries over the next month or two. But the winter is the key drill program. Reindeer and Sami are all in the arm of Finland, which is that top part of Finland. So that's not the issue. But what your memory may be sparking is we have some part of the project in an EU protection program called Natura 2000 that forms 20% of Europe. We are pretty much on top of that after many years, and we've been fully permitted for exploration. But it is a hurdle at the next level. But there's many examples of mines and developments in Natura, including Dundee Precious Metals down in Bulgaria and Kumfrograd. So some of our investors are very well versed in these areas, and there's very clear pathways to developing in these areas. But you've got to have an asset that is significant for the country, and we believe we're building that out. Also, you've got to have all the other issues around the project in line. So we have a lot of local support. We've just had an EU survey around the social issues, and 75% of the people in the local municipalities support what we're doing and where we're going on this project. So that's a key thing. And I mentioned the first stage of permitting had already been undertaken. And secondly, there is a cobalt addition, which is a byproduct, a potential byproduct here, but it's a critical part because it creates makes the project a strategic project in Finland, and they want to be a huge part and are a huge part of the battery supply chain. I mean, post-COVID recovery, they put 450 million euros on the table for the state mining company to build out a battery supply chain. And, they produce 10% of refined cobalt in the world, and out of one plant called Kokkola. And so they're already a large part of it. They want to become bigger, and having that 43101 resource is one of the few in Europe, let alone in Finland. So cobalt is the government metal. Gold is the key payable by a long shot. So they're all the parts that feed into this project, and we think we're pretty well on top of the project as much as we can be, with the locals thumping the table wanting this project to advance.
And thank you. Ian.
Thank you.
Mute.
Like they left on.
Ian, you're on mute.
All right, sorry, I thought it, right, I've got it. Yeah, thank you for the question. Yeah, look, the average grade of the main lode is 1 gram. The average grade of all intersections to date above a 0.5 gram cutoff in the new hanging wall is about 1.36. So anything we've published, if anyone wants to have a look, it's about 1.36. And that's, you know, internally checked. I think this deposit, it's worth noting that in the indicated zones on the main lode, the grade lifts with drill density up to about 1.1. So I think my view on the hanging wall is, yeah, there's some spiky numbers in it. You know, we've had sort of 12 at 12s and 10 at 10s recently, so not bad size in their own right, you know, sort of 120 meters apart intersections of that kind of tenor, but it's averaging out 1.3. So you could end up here with a, you know, 45 million tons at 1.1, 1.2. To give you some feeling on the economics of that, if we strip ratios on the deposit, I think you're going to end up in the range of 4 to 5 quite easily, and possibly as low as 3, depending on what we do with the lower cutoff grade and the grade recovery curve at the bottom end. And certainly the test work so far has shown great recovery at that end. Simple processing cost, big size equipment, you know, big selective mining units, and I guess the grind size on that met and the opportunity for gas power, I think really helps push that cost curve down. And you know, I think probably the best example in West Australia of a company operating would be Regis Resources, who are mining quite effectively and you know, one of the best companies in West Australia at about 0.9 gram head grade. So it is doable if your other economics work around it.
All right, thank you.
That helps. Yep.
So I think we're out of time, Andrew.
Yeah, I think we're up to just over the hour mark. I think it's been a really, really fantastic session, Jonathan. So I'd just like to go and take the opportunity once again to thank Jonathan and Dundee Goodman for hosting this session. Thank these 3 fantastic mining companies and mining projects. We'd urge you to all to go and check them out. Also, a big thanks to our 3 seasoned investors as well, the 2 Warrens and the Joe. And look forward to seeing you for the rest of the 2 days of Mines and Money, EMEAmericas online. Thank you very much.
Thank you very much.
Thank you,
Andrew.
Thank you.